Qualcomm beat revenue consensus, but missed on the bottom line. I mean, Q3 fiscal 2026 revenue came in at $9.95 billion, which beat the $9.67 to $9.71 billion estimates, but non-GAAP EPS was $2.21, missing the $2.23 consensus by 2 cents.
Right, and then looking at Q4 guidance, they're targeting 9.7 to 10.5 billion in revenue and, $2.05 to $2.25 EPS. The stock immediately slid over 7% in after hours, trading down to $144.53.
Yeah, so if you're looking at your portfolio today, you're probably wondering why the market just punished a revenue beat. It's kind of like watching a pilot try to rebuild an airplane mid-flight. They're transitioning from legacy tech to entirely new markets while battling some really heavy turbulence.
Right, exactly. Because if we look at the handset drag in their QCT segment, it's just rough right now. Handset revenue plummeted 20% down to $5.08 billion.
Wow. And a huge chunk of that is Apple, isn't it?
Oh, absolutely. Management actually warned that Apple product revenue is going to plummet by 50% in the December quarter. That takes Qualcomm's iPhone share below 20%. But, it's not just the Apple exit causing pain here.
Right, because there are other headwinds hitting them. You've got these industry-wide memory supply constraints.
Yeah, exactly.
Technically, device manufacturers just can't get enough memory components. So if they can't assemble the phones, they don't need to order the processors from Qualcomm.
Right, it just throttles the whole assembly line from the top down. And then on top of that, you have higher wafer input costs, which just squeeze their gross margins down to 54%.
Which is a massive squeeze. I mean, fabrication, assembly, testing, all those input costs are just inflating.
Exactly. So Qualcomm is being forced to implement price hikes to protect their operating model. But because of how hardware supply contracts work, they can't just flip a switch overnight. It takes a couple of quarters for those higher prices to actually flow through to the bottom line.
Leaving their margins heavily pressured right now. And those pricing hikes are definitely going to hurt demand in the short term, which I guess explains why management is pivoting so aggressively into entirely different markets. I mean, the bright spot here is undeniably automotive.
Oh, for sure. Revenue there surged 61% to a record $1.58 billion.
Which is, what, 23 consecutive quarters of double-digit growth?
Yep. And they just expanded major deals with BMW and Stellantis. CEO Cristiano Amon isn't just tweaking the business model here, he's engineering a massive structural pivot. He actually doubled the fiscal 2029 non-handset revenue target to $40 billion.
$40 billion, and they're dropping serious cash to get there. They just spent $3.1 billion to acquire Modular Inc. to build out an open AI software stack.
Right, and they gave a firm timeline for their data center custom silicon to actually start generating revenue in the December quarter. They're heavily committing to the AI race.
But I do have to push back a little on management's optimism here. Yeah. Is a theoretical $40 billion future target really going to satisfy you, the retail investor, when you're watching the core mobile business bleed cash today? I mean, the stock dropping 7% kind of screams that the market is just completely out of patience.
Well, it's the ultimate friction of a turnaround, right? We are watching this critical structural transition from a mobile-first chip designer to a diversified computing leader. The market is just hyper-focused on the near-term margin pressure and that Apple exit.
Yeah. But as Qualcomm forcefully untethers its future from Apple, it really leaves you with a final question to ponder. What is their painful near-term stock hit signal for other suppliers out there who are still heavily reliant on a single mega client?
It's definitely a huge warning sign for anyone holding those types of stocks. Be sure to follow the show for your daily earnings coverage.